Now, turning to our program, please welcome Jody Ristow, Financial Advisor and Managing Director of the Robert W. Baird Phillips Ristow Group, to introduce our speaker. Jody?
Good afternoon, everyone. I'm pleased to introduce my fellow Baird colleague, Michael Antonelli. Mike joins us today to provide his perspective on the markets in 2024 and his 2025 economic outlook. Mike is a market strategist for Baird's private wealth management business. In his role, Mike educates clients and encourages clients through his writing, events, and media to focus on why they start their investment journey, not to solely concentrate on exactly what their investments are doing at the moment. Mike earned his bachelor's degree in history from Purdue University, reflecting his fascination in the lessons from the past and how they inform the modern day. After kickstarting his career in the back office of trading firms, Mike earned his MBA from the University of Chicago. In 2007, he was recruited by Baird as an equity sales trader. Wanting to inform overseas clients of what happened in the markets while they slept, Mike began writing a daily email to international clients in 2010. 3 years later, he started posting it online under Bull and Baird name, and today provides his no-nonsense, practical, why-based approach to the markets and investing. As a member of Generation X, Mike straddles the gap between baby boomers and millennials, speaking to how history affects what baby boomers are concerned about, while also relating to the modern financial era of millennials. When discussing the market, he encourages clients to look at the historical parallels that we can learn from, reminding clients that fear has always been present. The things they are fearing now have been feared for a long time. So please help me welcome Michael Antonelli.
Thank you guys so much for having me. I really do love getting a chance to speak in front of Rotary clubs. I do this in all sorts of states across the country. I've done this in Cleveland, New York, Florida, Washington. So it's very, very fun to get to do it at home because there's a lot of people that I know here. I see some of my colleagues from local community events or from school or from my community. So I really appreciate another invite. I actually, every time I speak at some place and I've been there before, I tend to go back and say, how did I do? Right? Like, if you had listened to me, am I like the worst strategist in the world? Like, am I good? Am I bad? And I think, unless I'm off here, I think I've spoken in front of you. I think this might be the third time. Okay, I think this might be the third time. I did a Bitcoin video for you. It's online on YouTube. I did it in March of 2021. I just looked at it before I came in. And I said, how did I do on this Bitcoin video? We talked a little bit about what it is, and you can go watch it right now. It's still there. How did it do? So Bitcoin was about 45,000 when I spoke. It ended up going to about 60, and then it dropped to 15, and then it went to 100. So did I do fine? I don't know. It's at 100 now, but it did drop to like 15. Bitcoin, man, what an instrument that is. And I also spoke to you in January of 2022. I spoke to you, I looked it up, January of 2020. I looked at my deck. And a lot of the things that I mentioned then, I'm going to do again because I think it's important. But January, did anyone remember 2022? Bear market. There was a full-on bear market. I spoke at the start of a year that had a bear market, okay? But yet the stock market's had an incredible run, an absolutely incredible run. We're going to talk a little bit about that. We're going to talk about what really matters because I think that's important for you, for your community, for your business, for the world. We're going to talk about what really matters. But again, in my role, and there are some strategists in here. I think I just saw a couple come up on stage. In my role, I am asked to produce content and kind of forecast for wealth management clients with Baird, okay? And frankly, for the world, I have a Twitter account, I have a blog, I'm on video, so I'm really doing this for everybody. And you know what? I'm pretty freaking good at it. Like, I'm pretty good at it. Like, I am an optimist at heart, okay? I'm an optimist at heart. I am. I think that's the right way to make money. In fact, I have this, my pinned tweet on Twitter says, pessimists sound smart, but optimists make money. And that's true. Because you know what? They don't name wings of hospitals after people who hold cash. I'm sorry, they don't. They name wings of hospitals after people who buy things and risk and build things, right? They're not pessimists. Pessimists do not start companies. Pessimists do not make money. They do not. They sound smart, though, but I won't be doing that. We're going to talk about what really matters. I will give you some economic forecasts. I'll give you some fun stories. Not a lot of charts. I'm not a charts guy. If you guys invite charts guys, I think it's a waste of time. I don't think charts tell you anything. I think you will learn through stories. We're going to do a couple of those stories today. I'm going to give you a couple fun takes. But first I want to start with the following, okay? A guy like me, whose whole role is just to look at economic data and stories and what's happening in the world, I look at this stuff like on a daily, a weekly, a monthly basis. We look at gross domestic product, we look at industrial output, we look at all these things. And I'd like to remind you that the US economy is about a $30+ trillion entity, okay? 30+ trillion. We have about 160, 170 million workers, okay, in our nation. And once a month, we try to guess how many people gained or lost jobs. Once a month. We call it the non-farm payroll report. Some of you might know what that is. Do you know how hard it is to predict how many people gained and lost a job in 170 million people? You know what it is? It's a guess. It's a guess. Just a guess. And then time goes by, we change it, we revise it, but it's just a guess. All these numbers, again, is us trying to come to grips with the fact that uncertainty reigns. We try to come to grips with, we try to do like monthly data points and bi-weekly data points about energy and industrial output, and we try to make a big story about them, but again, it's mostly noise. You know that, right? It's just mostly noise. The US economy cannot be figured out on a weekly or monthly basis. It cannot. It's too complex of an entity. It's like trying to figure out your 16-year-old daughter, okay? It's hard. It's actually impenetrable. But we try to do it. Boy, do we try to do it. So much so that here's some headlines from the past few years. You could just read through these. I mean, you'll see these headlines coming from all over the place. You'll see them talking about recessions, and you'll see various smart people like the IMF, and you'll see like these are Wall Street Journal and Bloomberg articles, and wow, everybody's really calling for negative stuff, right? A lot of negative headlines up here, right? Does anybody know who Jamie Dimon is? So Jamie Dimon runs this company called JP Morgan. Have you ever heard of it? So it's a pretty big bank, right? Would you agree with me that Jamie Dimon probably has the most amount of financial information at the world at his fingertips? You'd agree, right? Like JP Morgan, let's be real here. They lend to governments, okay? So there is no human being on the planet that probably has more access to information than Jamie Dimon. And look what he said. Jamie Dimon, this is serious, just likely to tip into recession in 6 to 9 months. Why would he say that? He has all the information. Did we? No, we did not. In fact, the U.S. economy has been growing. Here's a fun stat for you. In the last 15 years, okay, let's play a little trivia game. In the last 15 years, which is a long time, how many months has the U.S. economy been in recession? 15 years. How many months? Just think in your head, just like we won't play Price is Right. You can just guess in your head. You know what the answer is? 2. 2 months. 2. You know what those 2 months were? When we were stacking toilet paper like this high, and Sendix was closed, and I was wearing a mask, and I was washing my avocados. It was the 2 months of COVID, March and April. That's it. In 15 years. And yet we still call for it endlessly. I'm sure if you were to go online right now, you'd find some strategist, some firm with a big fancy name calling for a recession right now. I guarantee you'll find it. Just Google it. I promise you. But why are we not falling into a recession? What's happening? The thing is, I have the answer. I have the answer. Why does the economy stay so strong? And again, it's going to be a couple of things that I mentioned earlier in the year, okay? See these 3 things? How much, I bet when somebody comes up to this, like they're going to ask me about one of these 3 things. See these 3? That's all we talk about. That's it. These 3 entities. It gains all the information, all the data, all the talk. I will spend the next year talking about this thing on the far left. I swear to you I will. It's all I will end up having to talk about because it's all the questions our clients will ask. Just this thing on the left. What's happening? Why is he saying what he's saying? Why did he tweet that? That's it. That will be my whole life. Isn't that great? I get to risk my career every single day. I get to wake up and risk my career every day. Doesn't that sound fun? We talk about these things all the time. Do they matter? Do they matter to the stock market? Do they matter over the last 15, 20, 30, 40, 50 years? Do they matter? For as much attention as they gain, do they matter? Well, there are things that matter more. Do these matter? In a sense, policies can matter. Stuff that they say can matter, but generally it's a bunch of noise. What's happening beneath the surface? What really matters? Again, that's the point of this. Some of you may have seen, I did this almost very same event at Secure Futures. I don't know if anybody was at Secure Futures last year. It's another great charity in town. I did this exact same thing, and it ended up hitting, I think, in the way that I hope it hits with you now, because this is super important. The next few slides, I'm going to tell you exactly what's happening and why I think it matters more than these entities. You've got to learn to ignore these entities as much as you can. I know that's hard. Okay? we need to talk about demographics. We need to talk about demographics. And why do I say we need to talk about demographics? Well, what is the U.S. economy? Just when you make it as simple as you can, what is it? It's just people, right? Is it just people working? It is, right? So let's think of an economy as just the number of people working times what they produce. That's it. That's as simple as I can make it. How many people are working? What do they do? That's it, right? Which is mean two things are really important. Number one, how many people are working? And number two, what do they produce? What is the economy? What are they generating? Because what does the stock market trade to over the long run? The economy of the United States. That's it. I can't make it any simpler. If you don't understand that, you don't understand how the market works. Over the long run, it's the economic growth of the companies of the United States. So we need to care how many workers are there. Well, over the last 30 years, who are the two most powerful nations in the world economically? Past 30 years, two most powerful nations economically. There's China and the United States, right? China and the United States. So let's take a look at the number of people working. Okay? So from 1990 to 2019, the nations of China and the United States saw their population working grow. Okay? Working age population grew dramatically. South Korea, same thing. All these other nations, their working age populations kind of stagnated. Some of them fell. Does anybody want to know why Japan has been stagnant for so long? Because their working age is shrinking. They're not having enough babies. It is just that simple. They're just not having enough people. There's not enough people that are working. Their working age population is shrinking. The United States and China did well. Great, Mike. That's awesome. Thanks for showing me the past. I lived through it. I really don't care. Tell me about the future. Well, here's the thing about demographics. It's set in stone, right? You can count the number of people born, right? You know what the demographics look like. You just go to a nation and count. So what will it look like over the next 30 years? This is actually shocking me. This is actually a chart I think is one of the most shocking to me. This is what it looks like over the next 30 years. Every nation declines dramatically. Every single one. They all decline dramatically, except the United States, which kind of hangs in there. Our birth rate is slowing, but we hang in there and change our working age population. So does anybody remember when China did this thing called the one-child policy? Do you guys remember that? I think they taught us that when they were there. Like, let's have one baby. You can only have one baby. What do you think that does to a nation's demographics? What do you think that does? You're looking at it. Now, let me ask you a question. What's the only other way you can increase the number of people working in your nation? There's only one other way. Immigration. How many people are going to immigrate to a Chinese communist nation? How many? You're going to immigrate to a Chinese communist nation. So they have major problems. That was projected that China would surpass the United States economy by like 2030 or 2040. Now they're projecting it may never pass it. And they're right. It will never pass the United States. They can't stop their demographic decline. They cannot. They could get every technological trend right, but they can't change the number of people that exist in their nation. This is important. Very, very important. The United States has a good working population. We're going to talk about that in a second, because when it boils down to what I said, I need proof that the United States has good demographics. I need proof that what's happening beneath the surface amongst all this noise matters to you in the stock market. I need proof. Well, I'm going to give you proof right now. Again, I talked about this a couple years ago. These trends are actually growing stronger. So I hope you're listening to me as you invite me back in 2 years. These two groups right here you see on the screen, these two groups, I'm going to make the argument that they're the same, okay? That they're the same. I mean, not in terms of bedtime. One goes to bed at 7, the other goes to bed at like 11. You could put me in the 7 group. There's nothing good happens after 11. In fact, I think I was at bed at 8 last night. I'm going to make the case that these are the same. I've written a blog about this. I told you this the last time. I'm going to tell you again, because if you're not listening to me, you're missing out on what's actually happening because of the noise. Who cares about the national debt and the decline of the dollar when this is happening? What is this happening? What is your economic prime? Think back into your life. What was your economic prime? So I'm going to make the case it was 35 to 45. Economic, okay, not your prime, your economic prime. I hate leaning over to this thing. Economic prime. Why is that? Well, when you're 35 to 45, what are you doing? You're buying a house, you have a family, you're into your career, right? You're starting to go to Costco and buy more egg bites, right? You're going to Disney, right? You're doing all the things, 35 to 45. We had a 35-year-old move across the street from us. They're having kids. They're starting their economic prime, right? When were baby boomers in their economic prime? I looked this up. So when were the bulk of them starting between 35 and 45? When were the bulk of baby boomers, which is a lot of you? About 1980. 1980, roughly. was when the bulk of the baby boomers started to enter their prime. What happened between 1980 and 2000 in the stock market and the economy? What happened? It's the number one bull market of all time. 1980 to 2000 is the number one of all time. All time. Baby boomers, congratulations. Thank you. Well done. Congrats. Then what happened in between 2000, when my generation, Gen X, starts to hit its prime? What happens in 2000 to 2010? What happens? Nothing. Literally nothing. The stock market goes nowhere. Nothing. Our generation, baby boomers didn't have enough of us, right? We're too small. But we did give you Nirvana and Pearl Jam, so give us some credit, right? Nothing happens. Nothing. What is now the current largest generation in the United States of America? What is the largest generation right now? It's the millennials. They are the largest generation. Baby boomers have a lot of them, not a lot of Gen Xers. They're the largest. They're all coming into their what? They're all starting to come into their economic prime. The largest generation coming into an economic prime. 2010 to 2020 was the number 2 bull market of all time. 2010 to 2020. Again, baby boomers, how much more do you want? Like, what more do you want? You got the number 1 and number 2. If you haven't grown your wealth, I know people you can call. Like, I'm serious. If you haven't grown your wealth over the number 1 and 2 bull market of all time, something's off. Right now, 2020 to now is actually doing better than 2010 to 2020. It's actually better. You're in one of the most incredible moments to grow wealth in history. But yet, what do you talk about every day? What do you talk about? What's going on in Washington? What about the national debt? What about that headline? What's going on abroad? I heard the Middle East is unsettled. Did you know that? Did you guys know the Middle East is unsettled? And yet, it's the 2020 to 2024. The stock market's up 100% in the last 4 years. It's up 67% in the last 2 years. It really, really is an extraordinary time to be an investor. Why? Because the largest generation is doing all the things. That's my take. And if you don't listen to me, I think it's a mistake. Look, 12,000 people enter their prime every day. 12,000 people are turning 35. By the way, these are customers for you. I don't know what you work in, but these are potential customers for you. 12,000 people are entering their prime. If you're a lawyer, if you're in wealth management, if you're a doctor, 12,000 people are in their prime in the US every day. The generation of millennials is massive, and they are driving incredible gains in the market and in the economy. So I have some bullish things I wanted to talk to you about. A couple bullish things. I pulled some Wisconsin data because, hey, we live in Wisconsin. Let's talk about that for a second. And then we're going to talk about something that I think is really, really important. So this is a really cool, the most bullish thing I could find. And this is the near future, not the 30-year future, but the near future. So if you were to bucket our population, remember we're talking demographics here. If you were to bucket our population into the 5-year cohorts, okay? 5-year cohorts, you say how many people are in that cohort, right? Look at where we will be in 2030. I'll put a little green thing around it. So 2030, that's 5 years from now, my friends. All of you, I assume, will still be working, or you'll be retired. You'll be beholden to the stock market and the economy. Take a look at the largest cohorts in our nation by 2030. Again, that's 5 years from now. What do you notice about it? The largest cohorts, the top 10, what do you notice about it? Working age, working age, working age, working age, working age, working age, kid. Do you know how good that is? Can I make that point anymore? Do you know how good that is? That in 5 years, our biggest cohorts are all working or kids? Because in other nations, that's old, retired. The United States economy is vibrant, strong. Do we have our ups and downs? Yes. We could talk about that. We do have our ups and downs. We just had a bear market, but it didn't stop 100% gain in 4 years, right? Congratulations. The United States' demographics are really still quite strong. Let's talk about Wisconsin for a second. I looked up the unemployment for the state of Wisconsin. So this chart shows the number of people 16 and older, okay, 16 and older, who are not in the labor force, who are looking for a job. Got that? 16 and older, not in the labor force, looking for a job. Wisconsin's 2.9. 2.9. I circled it. Look at some of these other states. I mean, California's 5, Illinois is 5. We don't like Illinois. Kentucky's 5. Minnesota's 3.5. Michigan's 4.8. Look at our state. Our unemployment rate's really low for people looking for a job over 16. Hey, nice job, community members, business members. Look at, we're really, like, if you look at these numbers, there's not many beneath us. You see a lot of 2s on there? I don't. State of Wisconsin, vibrant economy. Doing quite strong. I got another one. What about like wages? What about like, let's compare how much people make now to the past. Is it better in Wisconsin? Is it worse? And I'll adjust for inflation because you'd be angry if I didn't. Let's adjust it for inflation. What are the workers' median income by state from 1984 to 2023? State of Wisconsin's up about 25 grand. Okay? That's inflation adjusted. Because you'd be really angry again. Are we tops here? I mean, we're not the tops. Minnesota's doing better. You know, we are doing better than California. Oregon's doing all right. Maybe there's a lot of like forest rangers. I don't know what happens in Oregon. But Wisconsin's doing fine. Look at us. Our real median incomes, inflation-adjusted median incomes, are doing better than Michigan. We're doing better than Illinois. We're really doing quite well, guys. Unemployment rate's low. People are making more money in this state. It's a vibrant state, okay? It's a state that continues to be one of the best. I've made the case online that the future's in the Midwest. And it is. The future, we have water. We don't have like fires that wipe out cities. We don't have hurricanes. We do get this -3 thing, but that's it. That's it. I think the Midwest has got, if climate change is a thing, and it probably is, I think the Midwest has got a real bright future. Far temperate, we get more temperate. If it was more temperate here, there'd be like 5 million people living in Milwaukee. And then my home price would quadruple, and that would be great, right? Okay, let's move on. We got to talk about one more thing, okay? I mentioned people, okay? I mentioned people. That's important. I hope you understand why it's important. Working age people, that's critical. There's something you need to know about the U.S. economy. There's something you need to think about all the time. The U.S. economy is just a big housing play. It's just a big housing play. Housing is probably the most important thing in the U.S. economy. People's homes. For the average American, a home is their number one asset. Okay, we're going to talk about millennials in a second, but the U.S. economy is just a giant housing play, which means you care about what the housing market's doing. You care. Remember 07, 08? We had that collapse, one of the biggest collapses in history. That was a collapse of what? The housing market. Okay, the housing market is our economy. It's just a giant housing play. So I'm going to tell you a story about how the world works, and then we're going to talk about the U.S. housing market for a second. But first, we need to talk about how does the world work? How does history work? What do you need to know? Okay, see this ship up here? See this ship? So that ship is, that's not the Titanic. It's not the Titanic. This ship was set to make a 6-day sail between New York and Liverpool in 1915, okay? 6-day tour. The captain's name is William Turner. He's got a niece named Mercedes who's like, hey, before you go to Liverpool, can I take a tour of the ship up to New York Harbor? And the captain says, sure, come on board. So Mercedes pops on board. She starts to take a tour. And the crew's really antsy. 6 days, they want to go, right? They want to get on this tour, right? So they pull the ship away from dock. They pull it away, ready to go to Liverpool. And William Turner finds out that his niece is still on board, Mercedes. And then he's pissed. He's like, I'm not taking her to Liverpool. Like, redock the ship. So there's a delay in the departure. They got to redock the ship, okay? So they get Mercedes off the ship, and they're like, okay, now let's go. We got to take this 6-day tour to Liverpool. So 5 days later, this ship is in the Celtic Sea. It's off the coast of Ireland. Celtic Sea is off the coast of Ireland. 5 days later, this ship is traversing fog in the morning. And the fog starts to lift in the morning, okay? And when the fog lifts, an Imperial German U-boat surfaces and fires a torpedo into the RMS Lusitania, killing 1,500 people, okay? The fog lifts, the U-boat surfaces and kills 1,500 people. The Lusitania wreck is off the coast of Ireland. Thinking of the Lusitania in 1915 was one of the seed events of the 20th century. Now, you may not know this, but the United States did not want to enter World War I. We had no interest. The American public did not want to enter World War I. When this ship sinks and 1,500 people die, public opinion switches to enter World War I, okay? We enter World War I. And a series of events kicks off in the 20th century, culminating in the United States winning World War II and becoming the dominant superpower that you live in today. Okay? So if it wasn't for World War I and World War II, the United States, as you know it, would not exist in this current form. It would not. We were just an emerging market in the early part of the 20th century. We were nobodies. We were not what we are today. World War I and World War II is the reason the nation you live in exists. So let's do a thought experiment about how the world works, okay? A thought experiment. What if Mercedes doesn't take the tour? What if she doesn't? Okay? What if the ship departs on time and there's no delay? What if they're transiting the Celtic Sea in the fog? It doesn't lift. And the Lusitania makes it to Liverpool. Do we enter World War I? We might not. Maybe we don't. If we don't enter World War I, do we enter World War II? You could make the argument that maybe we do. But let me wrap this up by saying the tiniest things in the world change history. The tiniest little events change history. I'll give you another example in a second. If she doesn't take the tour, are we just a Canada? Are we just Canada? Are we just a Canada? Her taking the tour may be the reason why you exist in the nation you exist in today. The tiniest thing goes in unbelievable ways through history. The tiniest things ripple through history. I'll give you one more example, then we have to move on. In 1933, a man named Giuseppe Zangara went to a political rally in Miami in an attempt to assassinate a leader. Okay? But Giuseppe Zangara was only 5 feet tall. Wasn't very big. He brings a 6-shot revolver with him. In order to assassinate this leader, he needs to stand on a chair so he can shoot above the crowd. He can't see. He fires 6 shots at the target, ends up missing all 6, but kills a man named Anton Cermak. Anton Cermak was the mayor of Chicago. Do you know who Giuseppe Zangara, the 5-foot would-be assassin who stood on a chair, wanted to kill with his bullets? You know what? Newly elected leader in 1933? Franklin Delano Roosevelt. What if he connects? What if he kills Roosevelt? Does Social Security exist? Does our nation get through World War II in the same way? Do you realize how important the fact that he was 5 feet tall is? The tiniest stuff matters. Oh my God, I could do this for all of history, by the way. I could do so many. We're not going to, but I could do this for all of history. So what's the one thing that's rippling through the economy that you may not be thinking about? You might be if you run a bank. You might be if you're a mortgage broker. What's the tiny thing that's rippling through the economy due to the fact that somebody got sick in China? Again, the tiniest little event. Somebody got sick in China. What happened in the US? Well, the stock market crashed. You all lived through it, right? What happened when the stock market crashed? The bond market started cratering. Remember? Then the whole economy was coming apart at the seams. Then this entity called the Federal Reserve said, we're just going to buy everything. We will backstop everything. We will buy anything you send us. We will buy it. So what happens to the 10-year Treasury rate when the Federal Reserve says that? It plummets, right? What did it plummet to? I don't know, like 70 basis points? What plummets when the 10-year note plummets? The 30-year fixed rate mortgage plummets to a point where it touches the greatest gift ever bestowed on U.S. homeowners in history. The greatest gift in history. You know what that gift was? A sub 3%, 30-year fixed rate mortgage. And if you don't have one, you need a new advisor. Because if you didn't refi when the 30 years below 3%, that's crazy to me. Think about right now, what is the US T-bill? What is the 3-month T-bill yield on an annualized basis? It's like 4.8 or 5. Okay, a 3-month T-bill, annualized basis. You could technically just put your entire principal into a T-bill and the government would pay your mortgage for you, right? Is 4.8 more than 3? I think it is, right? It's crazy what happened. That's crazy. Do you know the richest cohort in the United States of America at age 35 are millennial homeowners? The 35-year-old homeowner is the richest that cohort has ever been in history. Why? Because they bought in 2020 and then they refied and now they have homes they can never leave. Can never leave. Did you guys know I own Dan Vliet's old home? He's sitting over there. I own his old home. I can never leave. Dan, I'm in that home forever. I have like a 2.75. Can I leave? No, but I can build a new garage, which I did. Look at the loan to value on mortgages in the United States. Look at the loan to value. It has plummeted over time. Loan to value, okay? Loan to value. And this includes a lot of baby boomers who frankly just own their home. But loan to value has been plummeting all the way down to 50%. There is so much nested equity in the United States housing market. Do you know what that does? Do you know why the economy is doing so well? I think we should be able to put the pieces together. A huge generation doing all the things with a housing market that's incredibly strong with a ton of nested equity and mortgage rates locked in. American balance sheets are as good as they've ever been. And I've just told you why. You know what happens when American balance sheets are really strong? The economy doesn't go into recession. Could it? Of course. What will cause it to? Nothing I can see in advance, right? You think I could come up here and tell you exactly what will throw the U.S. into recession if there's only been 2 months in 15 years? It will be something I don't see. I think that's the smartest thing a strategist could tell you to your face, right? Do you want me to lie to you? I don't want to lie to you. The economy is strong. Consumer balance sheets are strong. What will throw into recession? Something nobody sees coming, like COVID, like 9/11, like the global financial crisis, all those things. So just another quick blurb on just how, how much equity. The green is people that own their home free and clear. 40% of our homes in the United States are just owned with no mortgage at all. Okay, just none at all. And then greater than 50% equity is another 30%. Do you know why Federal Reserve rate hikes did nothing to the U.S. economy? Because I told you. The Federal Reserve, when they hike rates, you know what they're trying to do? Slow down the housing market. That's what they're trying to do, essentially. Can you slow down the housing market when everybody's locked in at 3%? No, you cannot. It doesn't affect anybody. Everybody's balance sheets are rock solid with a ton of equity. Does that mean I have no worries? And we're near the end here. We're near the end, okay? Does that mean I have no worries? And I'll answer questions if you guys want to ask me about politics. I'm sure you do. Does that mean I have no worries? I mean, I told you I'm an optimist. I told you the backdrop of the economy. I told you why it's so strong. I told you about the housing market. What worries do I have? Well, the worries that I have are really kind of centered around, let me see if I can put this in an interesting way. The worries that I have center around how the world currently exists and what we're going into, okay? And that doesn't have anything to do with politics or people in power or anything like that. It mainly has to do with the following. Everybody's going to have their own version of the world that they occupy, okay? Everybody will have their own truth now. There's no central source anymore. So what you believe may be true, other people may believe are not true, and you just will be at odds. And I think that one of the biggest problems that advisors in my firm face, and certainly if you're an advisor in another firm, you face a real major issue with disinformation. You just do. You will spend your entire career as an advisor myth busting. You will. Because your clients are going to show up to your doorstep and say, I know you wanted me to invest in this, but I think that the dollar's collapsing. That will be an advisor's job. I think that the dollar's collapsing. I think that this current government is corrupt, and I don't want to invest in the stock market. Everybody will have their own view because now we have such a splintered information source. I've said this to Baird's clients, and it's been truly impactful. I don't believe that their most valuable resource is their money or their time. I don't think it's, and for you either. I don't think your money or your time is your most valuable resource. And you might think that's weird, but I know rich people who are miserable, and I know people that waste a lot of their time. Okay, I think your most valuable resource is your attention. In this era that you live in, I think your most valuable resource is your attention. Who do you give it to? Who are you giving your attention to? Are you giving it to disinformation merchants? Are you giving it to people who are trying to make you afraid? Are you giving it to people who are trying to scam you with coins? Who are you giving it to? Because your attention is all that you have left. And this is an economy whose sole purpose it is to get your attention. Do you know that Meta, this Facebook, ever use Facebook? I assume you all do. You know Facebook has $1 trillion algorithm? What's the algorithm's goal? What is it trying to get from you? Your attention, right? Just your attention. That's it. It's not trying to get your house or your 401k. It's trying to get your attention. And you give it to it freely, right? TikTok got banned for 30 seconds and my kids lost their minds. They were crying. My daughter was crying because TikTok got banned. What's TikTok's sole purpose? To gather my kids' attentions, right? Just to get their attention. That's the world you live in. You don't live in a world where information is centrally sourced anymore. You live in a world where people will try to take your attention from you and make you afraid. There are some pretty cool things that we need to talk about when it comes to the new administration. We'll be talking about tariffs. We'll be talking about immigration. We'll be talking about tax policy, all things that Baird has experts in that we will be talking to our clients about. But I will say this. What I want you to remember, I lived through the first Trump administration, as did all of you. I was an equity trader. I was not in my current role. I was an equity trader for Baird, which I loved. And here's what I know about Donald Trump and the current administration. I know that Donald Trump likes to talk on social media. That's one of it, right? You agree? He likes to talk on social media a lot, right? He'll often just put tweets out, policy, I'm tariffing there, I'm doing this, I'm doing that. Donald Trump produces a lot of information, right? A lot of online information. How will you know what is going to happen and what won't happen? How will you know what is going to be policy and what won't be policy? There will just be a lot of noise. Finding signal amongst noise is the role that I occupy and the role that some of you might occupy, but there will be not a lot of signal and a lot of noise, right? What's the best way to tackle that? Well, one of the best ways is kind of look at the market, frankly, because the market's trying to digest everything he says too, right? And the market will go up and down based on what he says. But remember this, okay? Whatever gets proposed as policies, the Republicans have like a three-house lead and three-seat lead in the House, right? Maybe it's five. Maybe it's five. Do you know how hard it is to pass stuff when you just have 5 people, right? Any moderates shut it down instantly, right? 5 people. And not only that, like there's all these people that seem to have veto power. Like maybe Elon Musk has veto power. I don't know, like, right? So the House majority is very slim, very, very slim. And we know there's the Freedom Caucus, right? What if they're not happy? And then nothing passes, right? So it's not as easy as saying, oh, he can just say something that'll happen, right? Can it actually pass? I want you to always ask yourself, can it actually pass what he's saying? But remember, Donald Trump does like to measure his success by the stock market. He does. The stock market's a very important component of what he talks about. So I think if you look at the stock market, it's the ultimate arbiter of like, can this happen or can it not? Right? There's going to be a lot of noise, but I think looking at the stock market is a great way to try to break through that noise. So final thoughts. I just want to wrap up and say, first, thank you. I hope you enjoyed this. I mean, when I do these, I'm intending them to be enjoyable, right? Because these things can really suck. I'm sorry. Like, I went to business school at Chicago. Like, terrible. Not terrible. I love the University of Chicago, but the lectures are really terrible, right? They're boring. My intention when I do these events, especially with front of Baird clients and certainly community members, is to talk about the stuff that actually matters in relatable ways. That's my brand, like relatable information. That's what I like to do. And I hope you learned something about what's happening in the economy, what's really happening, and that it removes a little bit of your pessimism. Because if you came in here with pessimism, if you make pessimism part of your life, I promise you, you'll never make money. You just won't. The stock market's up 100% in the past 4 years, okay? I looked at the data before I sat down. If you go from inauguration day to inauguration day, okay? President Biden's stock market returned 58%. Okay? Inauguration to inauguration, 58%. Donald Trump's first term was 67%. Those are roughly the same, right? I mean, for argument's sake, those are roughly the same. Remember that the stock market doesn't root for certain politics or parties. It just doesn't, okay? The stock market does not root for any particular party to win the presidency. It does not. Okay? When President Biden was elected, we had one of the largest post-election rallies in history. When Donald Trump was elected, we had one of the best days in history. Those are two different people, and yet the stock market responded. Why? What does the stock market care about? It cares about, no, the market does not care about certainty. The stock market cares about the earnings of the companies of the United States of America. That's what it cares about. The market revels in uncertainty. If there was certainty, the stock market would never go anywhere. If it knew exactly what's going to happen, there would be no stock market returns. And I will say this is how I ended all my election events. I wish I could have done an election event for you because I was right. I'm sorry. I did 8 weeks of election events for Baird clients, and I was dead on right. The reason that the stock market cares about the companies of the United States of America, not the politics, and not the people, not what's said on Twitter, is because of you. It's because of you. This is what I said to our customers, and I'm saying it to you because you're no different. Will you get up and go to work every day, regardless of who the president is? Will you? Like, of course you will, right? Will you get up and go to work every day? Like I do. Will your neighbors? Will your neighbors go to work every day, regardless of who the president is? I think they will. What about your friends and family? What about every other American? Will they go to work every day, depending on who the president? Of course they will, right? That's it. I've just given you the answer. That's why the economy does so well, because we don't care about who sits in Washington. We care about taking care of our families, doing a good job for our customers. That's what keeps the economy so strong, not the person who sits in power. Remember that. Okay? It's us. We're the ones who drive the economy. And are there any 35-year-olds in the room? I don't think there are, right? Oh, okay. Hey, thank you. 35-year-olds, keep crushing, okay? Because we need you to crush so we can retire. I mean, baby boomers need 35-year-olds to crush. You do, trust me. And they have been, okay? So millennials are super important. The housing market's super important. The one thing that would, just going back one slide, the one thing that would make me afraid, if I would come up here and be afraid, is if the U.S. housing market starts to fall apart. That makes me afraid. That would make me nervous, okay? That would make me nervous. The U.S. housing market is crucial to the entire U.S. economy. We're a consumption-based economy, okay? So people's homes really, really matter. Okay, I'm willing to do Q&A. I think I spoke for 40 minutes. I will, if anybody wants to line up, if you guys want to,
Thank you, Michael. I will pass the... I have no doubt that people will leave feeling uplifted and stories they can relate to, but hopefully we have time for a couple of questions.
I definitely do, yeah. I'm happy to.
Michael, thanks for joining us. Given the millennial cohort is so strong now, what does that mean for the Social Security Trust
Yep.
and its continued, hopefully, viability?
Yeah. So questions that we often get, okay? When you're in wealth management, you have older clients like, what about Social Security? What about retirement? Stuff like that. So we did a video on this talking about Social Security Trust. So you may or may not know this, but Social Security is a pay-go system. Does everybody know what a pay-go system? You pay into it and then you take it out at the end. So if the Social Security Trust went to zero, okay, let's say tomorrow it was zero. All of a sudden this whole thing was just nothing. Payroll taxes account for 85% of benefits, okay? Just payroll taxes. So even if this trust fund was a zero, and they did nothing about it, you still have 85% of benefits covered by just people working, okay? My take about the Social Security Trust Fund is that there's no way in a million years Social Security will ever be allowed to fail, nor will benefits ever be cut. Why? Because the minute benefits were cut, people would unelect that person and elect somebody that would say they will reinstate the benefits. Number two, we print our own currency, so we print our own money. So the only way that we would allow Social Security to not pay benefits is if we chose not to fill it with our own currency, right? So the demographics to me are so sound, number one. Number two, couple it with the fact that we print our own currency, we would never allow Social Security to go insolvent. And number three, anybody who did would just be voted out of office for somebody who would just reinstate it. Like you guys know that, right? They would just, okay, you're gone. Somebody would just run on reinstating it and they would win. So I don't think Social Security is something any baby boomer should have to worry about in terms of its viability. I think it'll be fine. It'll be fine. They wouldn't let it not be fine. I can't imagine.
So as a boomer, my first mortgage was 18.4%.
It's crazy.
I brought 4 millennials into society, and they're all working. So, you're.
So you helped us. You're the reason we're doing so well.
But birth rate is down. Your chart showed that we rely on immigration.
No.
We have a president that's talking about tariffs, which are really going to hurt housing. People are trying to get into 3% mortgages. I think the biggest statement that you made that as a boomer, there was a lag. I was busy having kids and buying houses at high rates.
Yep.
And I didn't enjoy the first stock market boom because I didn't know it was coming, but I knew housing was important.
Yep.
How do we get people to feel that housing is important and that putting roots down is important and change the economy in that way rather than trying to predict I'll buy a house when rates come down? But I always knew prices would go up. So
you're saying how do we get people
optimists?
How do we get people to believe in housing, basically? Or so there was this notion that millennials would never buy homes. Like they would never, they just rent and they didn't want to buy homes. The people that bought the home across from me are a millennial couple. Millennials have been proven that they do want homes. In fact, in 2020, the number one home buyer in the United States is millennials right now. Will rates ever go back to 3 again? Is that a good question? Like, would rates ever go back? Do you know what it would take to get rates back to 3? It would take a crisis of some sort of global proportions. Does anybody want another COVID? I don't. It would take a crisis, right? In order to get the 10-year down below 1%, you need a crisis. And I don't want that to happen again. So I think rates will remain stubbornly high, if stubbornly high is between 4 and 8. But I don't think you're going to see the 18% inflation, those rates again. I just don't think we would just never be at a point where the bond yield would be so high that we bring those back. I just feel like that's a different era. But I think that when it comes to housing, millennials do want homes. I think they do. I think that it's been proven by the demographics of who's buying homes right now. So will they get 3% back? No, which is, again, why it was the best trade of your life if you have a 3% mortgage. But okay. Go ahead, Paige.
Hi. Hey, thanks for coming to speak with us today. So with consumer spending making up such a large portion of GDP, especially rising in the most recent years, how concerned are you with some of the leading indicators surrounding the lack of excess savings that we've depleted, as well as the rise in credit card delinquencies and what that impact might be on the overall economic growth?
Sure. Okay. Credit card delinquencies, kind of balance sheets. So one of the things I've noticed in my career, and some advisors may have noticed this too, is that a lot of people like to talk about debt. Okay, like nominal levels of debt. They'll say credit card debt is $1 trillion. Is that bad? I'm sure all of you have seen that headline, or that might be something that you're talking about, delinquencies, those kind of things. What I find curious about those questions is it always looks at one side of the balance sheet, right? It just, debt is this term that kind of soaks up a lot of negativity. It looks at one side of the balance sheet. I like to say, what's on the other side, right? So if there's $1 trillion in credit card debt, okay, and there is, what are the assets? What is against that? What's on the other side? And I looked this up for a speech the other day. So Americans in aggregate, if you look at household balance sheets, have about 36 trillion in debt. 36 trillion, okay? One of it is credit cards. The bulk of it is mortgages, okay? The bulk of it's just mortgages. And then there's auto loans and car loans. So about 36 trillion in debt. What are their assets? What are their assets? So last I looked, assets are about 164 trillion. So 164 minus 3, so their net worth is at a record high. Net worth of the United States households is at a record high. Remember, assets, liabilities. So when I think about the debt data, as it grows, which it is, are assets also growing? The answer is yes, right? So say I have $10,000 in credit card debt and I make 200 grand a year. But the next year I'm making 500 and I have 20 grand in credit card debt, right? So it's doubled, but my income has gone up, right? My income's gone better. A lot of the statistics around consumer spending can be twisted in ways that are tough to unpack, right? Which means that if the delinquencies are rising, that can be true, but are they at record levels? Are assets falling while delinquencies are rising? All these things all work together, but every piece of data that I've seen says consumer balance sheets are as strong as they've been in history. That's every piece of data I've seen, and I'm happy to provide that if you guys would like that. But it is definitely something I will watch. Consumer spending, delinquency stuff, I will watch. But in my opinion, the consumer remains still quite strong. Okay, thank you guys so much. I appreciate it.